for Castrol as we speak. For the rest of the market as well, it's a decent pickup from where we were poised to open, which was only a very minuscule, flattish kind of move. It's Maruti all the way. A big move coming in on Maruti. You've got Maruti now scaling higher by almost 5%. M&M, ITC, Tata Motors PV, Eicher Motors, Bharti. These are the stocks which are lending support to the market today. And got to doff your hat to Reliance Industries. For the past 3 consecutive sessions, Reliance has been a very big mover. Today as well, higher by 2% as we speak right now. But another set of earnings, Motherson Wiring, and let me welcome on board Anurag Gehlot, the COO, joining in on the show right now. Also Gulshan Pahuja, the CFO. Anurag, Gulshan, both of you, thank you so much for your time. Anurag, let me start off with you because in Q3, you guided for a strong volume-led growth into Q4. Your revenue has come in strong as greenfield plants stabilize. How much of this growth is sustainable versus the ramp-up led?
See, as you rightly said, MSWIL has given a very strong performance with growth in revenue and margins both. Q4 remains the highest ever quarterly revenues of 3,335 crores, which has grown by approximately 33% year on year, though market has grown by around 11%. Similarly, the whole financial year, if you look, the sales revenue has grown by around 23% from 9,320 crores to 11,478 crore. And we have also crossed the mark of 10,000 crore in the sales revenue. And just to add that we are outperforming the market, and this is mainly because of these 4 reasons. One is obviously, as you said, the volume growth, which is happening in double digit when we look into year on year. Secondly is the content is growing into the wiring harnesses, higher content, because customer is choosing the feature rich models. And that's what the content is growing into the wiring harness. Third is that obviously the commodity prices are increasing and there is a impact of that also. And also our availability into the new launches and the new models which we are securing the business into the with the OEMs. So looking into these total sales, these are the 4 main reasons where our sales revenue is contributed by these 4 factors.
Right. Anurag, were there any production-related challenges or shortages, especially when it came to gas?
We have no direct impact because of these gas crisis, except of where the food is also getting prepared for our employees, and that is the only one place where we are using the LPGs. But again, there are many other ways. Alternative fuels are there into those areas for cooking the food. But other than that, there is no LPG impact directly on our business.
Gulshan, let me get you in on the conversation because I want you to quantify the impact of elevated copper prices and the lag in pass-through, and by when is it that you should see margins fully normalize?
So if you look at it, the quarter on quarter, there's an increase of 18%, and that was there in the previous quarter as well. So first, copper prices needs to be stable to look at the normalized margins. We have the contractual terms with our customer where we do the pass on with on a next quarter volumes with respect to the quarter or a 6 months with few customers. So here, if you look at the year end, if you look at the quarter 4, or if you look at the full year in profitability, it is not significantly impacted as we see in the 4th quarter. So that means what? That the increases with respect to the copper prices in the earlier periods have already passed on to the customers. So now we have to look at the quarter 4, which will be get compensated in the next quarter. But I wish I could protect how the copper will be trading in the future, so we would able to tell you better. But if this continuous spike will be there is some challenges with respect to the profitability. But having said so far, we see that we would be able to absorb that in the next quarter. I mean, last part of the course with respect to the quarter 4, we would be able to observe in the quarter 1.
Right. Anurag, you said that volumes will carry forward into the next quarter. Are you seeing continued order visibility into FY27 or any signs of slowdown from OEMs?
See, for the quarter one of this financial year, 1 month is almost near to close down in next couple of days. And the volumes forecasted so far is what we have seen into the Q4 also. So it's on the similar way at this point in time. And we are not seeing any slowdown as I speak. But we have to see for the month of May. The first week of May will tell about the May requirements very, very clearly.
Gulshan, new plants move forward, optimal utilization. What is the steady state EBITDA margin that we should build in, and is double-digit margin achievable?
See, we are not a margin-driven company. We have been able, we are growth-focused companies, and we have been able to deliver the more than what it is required. I mean, more, close to 40% in the past year, in the current year, also around 38.7%. So we are already there in terms of the healthy margin state. Second, obviously, one this optimization or a stabilization with respect to the greenfield plants will happen in a due course of time, because some plants have not ramped up fully. Like the one plant for which the SOP was done in this quarter itself, it will be ramped up in 1 or 2 quarters. So obviously, once this gets stabilized in few quarters, you will see the very good margins where we in respect of the existing plants. So there is and it is very healthy state of margins which will be there. It's just that initial startup costs which got this impacted our greenfield plants. That's the only point.
Right. Gulshan, you target to maintain a 40% plus ROCE target with ongoing capex. How confident are you of sustaining this in FY27?
We are quite hopeful. I mean, the momentum which was built in the quarter three, it is still continued in the quarter four also. And we were very hopeful where the industry have been grown by 11-12%. We've been able to grow by 33% this quarter. And for year also where the industry is ranging around 10 to 11%, we are more than 20%, 22, 23%. So, and we are very hopeful. The market is very optimistic for this quarter also, and the volumes we are receiving from our customer for the next year, we are very hopeful that we would be able to sustain it, that growth. But the market, nobody can predict the market in an actual way. So let's just see how it will pan it out. But we have been hearing about a lot of expansion plan which the customer have been announcing. If it just go that way, I think we will be in a very good situation next year also in terms of overall volumes.
Right. Anurag, Gulshan, both of you, thank you so much for joining in today and giving us that color on your earnings and what the visibility